Wednesday, July 19th, market analysis, Stan Ehrlich. And this bull market is marching on. New highs again across the board for several days in a row now. And this now is the fifth day that we are in overbought conditions. So we are almost assuredly getting very close to the downside correction I've been talking about for the last 3-4 days on the way up. Now significantly into a resistance area on this spider, and I usually start out with the stock market indexes and typically the S&P, and this is now approaching the trading range for a couple of months back at the end of 2021 and the beginning of 22, when the stock market indexes topped out and came down into the October 13th low. It turned around and we've been going up since. And in the last couple of months, last 3 or 4 months, the rate of change is getting stronger and stronger. The overbought condition is becoming more frequent. And we are now in a very, very dangerous area where it topped out over a year and a half ago. Don't go chasing bull markets up like this. That's usually a very big mistake. And watch out, we're about to have a downside correction. Could be starting today. We did open on the 1-minute chart a little higher than the high of yesterday. And within a short period of time came down, closed the opening gap, rallied back up again, and managed to make a new high by a squeak. But we turned back. So if you're steady on the close where we are, all well and good. Maybe there'll be another high tomorrow, not necessarily by a lot, and getting ready to turn back down. But we're primed to do that at any point. Doesn't seem to have started yet, but I'm warning you, it's going to take you by surprise maybe. Typically does. The market always does what it's not supposed to do when you don't expect it. So the DIA did gap up, and it still has so far this morning a little bit of a gap, and we're at 9:55 California time, just a little bit past the middle of the day. Now into a resistance area for the first time in the DIA, and this is where a lot of tops and bottoms, mostly tops, occurred going all the way back to April of 2021 into the beginning of the bear market, which was on December 3rd, I think it was, January 5th, excuse me, of this year. No, last year, 2022, with a bearish ER sell signal smack dab on the high. So we had the bear market until October 13th, a bullish engulfing, and in most indexes, a green buy signal officially. And here we are at the highest high in July since last October. The next chart is the QQQs, and it is the same, with the exception being, just 1 second, the fact that we got a sell signal on the exact high day, November 22, of the beginning of the bear market. And on the Qs, we got the exact low day at the bottom of the bear market, October 13th. 100% of the bear market, we have sell and buy signals. And so far, 100% of this bull market, because October 13th was that profound a turn, the bottom. For a year plus before, and so far, 9, 10, 11 months, something like that, since October 13th. Now, overbought 5 days in a row in a historical resistance area, 2 small gaps on the Qs to close just from a few days ago. And that means you were supposed to come down at a minimum to 374.20. That closes the highest, the last gap. But a couple of days earlier, there was a gap down to 368.75, and that looks very likely to get closed also. But I am expecting it not to go below 363. So you've got some objectives to reach on the downside and some areas where the market probably won't go below. So you got a zone in which to look for reasons to turn bullish and be a buyer. That's it for stock market indexes. I do want to comment about the Russell 2000 before I leave. We are very, very close to important highs at the beginning of the year and overbought. And like all three other indexes, all four of them now are overbought. We don't see all four of them oversold or overbought more than just a few times a year, maybe two or three, four. And they almost always end up producing a turning point. It's a matter of being fine-tuned and picking the day that it starts to happen, which is what I'm trying to do. Okay, futures markets. I usually start, oh, that wasn't good, with the E-mini and overbought, just like the spider, no real change in commentary or opinion, looking for a typical correction in a bull trend. I don't expect it to be anything major, but the higher we go, the quicker we go, the bigger the drop. Next chart, bonds. Fantastic, incredible, I can't believe it. Cycle low combination in a support area with oversold conditions. Almost a bullish engulfing. Too bad I didn't get a green buy signal, but that's exactly what happened. And I talked to you guys about this before it happened, and it was July 10th, only a week and a half ago. Today is a new high and likely a new high close since that reversal. Now, it wasn't a bullish engulfing. I didn't get a buy signal. That's too bad, but I don't always. But I see the reasons for markets to turn and try to say so as accurately as I can. So that was the bond chart, but I also want to show you the EC forecaster, Ehrlich cycle forecaster, being applied to the same bond futures. And the green zone columns is what we call the WOO, or window of opportunity. It's 10% of the 88-day cycle. And if you are looking at price action that shows you that the market is likely to turn around during one of these green or red for sell signals timeframes, then the cycle could be turning and the price action would change trend, which is exactly what the series of cycle lows have done so many times in a row, pardon me, in the last couple of years. The last time was March, almost exactly on time. On time, October. On time, June. On time, February. On time, October last year. And that was actually October 21. A nice place to be a buyer, June 21. And then finally we get a cycle low that really didn't work. And here we have a cycle low that really didn't work very well, but there was a small profit potential. Same commentary here, a little bit more accurate. And this was a whopper. Great. This a little bit late, and I'm now going back to September of 2019. And even May of 2019. I got to tell you, this cycle has had a very profound history of being accurate many, many times. So I am obviously going to be screaming bloody murder around August 17th for the next cycle high. That's next month, the middle of next month, approximately 4 weeks from now. Let's see how high I can get in the meantime. More futures, and it will be 10-year notes, which has the same cycle, of course, interest rates. And I'm looking for more of a rally. The interest rate futures, bonds, and 10-year notes are, in my opinion, building huge long-term major bottoms. The profound breakout is going to be when we start closing above the highs of January, February, March, April, May, which are very close together. and that would be approximately 118 for the 10-year notes and higher. Probably a really big up day. Stay high, stay strong, and continue on for another day or two would be fantastic and typical sometime in the next, oh, I don't know, 2-4 months. Bonds, crude oil, here we go. Crude. Got overbought a few days ago, started to slip back down, popped back up a little bit yesterday and today, no new highs. So I'm still looking for it to turn back down again. Long-term trend is still down. We're in an area where it has been fiddling around in quite a bit for months and then broke out to the downside, but managed to come all the way back to the resistance area and then again challenged the lowest lows with a new low, but it didn't stay there. And that's a false downside breakout, which implies a rally, which it did for a few days. And now large support area developing. I'm wondering whether this is trying to bottom out long term. I haven't come to a conclusion yet. Let's wait to see what happens next. Not much commentary at the moment. Heating oil, getting a little stronger than I expected. We did get a good sell signal 2 days ago, 3 days ago. It only went down for basically 1 day. Good profit potentials, short-term trade, to say the least, but a profit opportunity. Now new highs and on its way up again, but very, very, very close to overbought. So I'm not expecting too much strength until another downside correction occurs. Next, natural gas. Resistance above the market, neutral RSIs. I'm expecting it to go sideways to lower pretty quickly, very soon. Next, gold. Overbought now, second day in a row. Inside trading range day, no higher, no lower than yesterday's range, and currently about unchanged, only up a couple ticks. I'm looking for it to slip back down again because of the overbought conditions. Let's see what it can do if it comes down to 1,900 and if it can break that or not. Silver, at a resistance line, punching through it a little bit, not that much, still a resistance area. I'm liking what I'm seeing in terms of telling you I think it's topping out. I'm looking for a larger break, at least down to 23, 22. And if that's true, there's a chance that a bigger, more bearish, much longer term pattern may be developing. Overbought for several days now. Next, overbought for platinum, 3 days. Touched a previous bull trend line, super accurate yesterday, and starting to pull back. Expecting to see lower prices very soon, very quickly, right away, and challenge the 900 level, within a couple of weeks, 3-4 maybe at the most. Next chart, copper. High grade hit resistance twice lately, stopped, as you would expect. Didn't get any red sell signals, but overbought condition on the first one, and came super close to overbought on the second rally into the same resistance area, and has obviously turned down the last 3-4 days. Let's see if we can break below 3.68 and maybe below 3.56, which would perpetuate a longer term trend. Next, soybeans. It looks like my very broad potential gigantic top is in the process of failing. We have a new high and a new high close yesterday, and today it's again in new highs and new high close. But the difference is we have a new high in price for the last month or so, but not in the indicator. That's a divergence at the moment, and we're overbought again. So if it were to turn down, it doesn't look like it momentarily, and start to make lows lower than yesterday's lows, for example, I would claim that this is still a possible broad double top, not as accurate as a couple of weeks ago, but it's such a huge size that you have to allow for a little bit more leeway on the difference between the two peaks. Looking for a move down. Next, bean oil. Almost the same kind of commentary. Resistance, made a new high, so far couldn't hold it, and now we're back down a little bit below the previous rally highs, 3 of them or so, in the last couple of weeks. This could be the beginning of a break. Looks quite plausible. Next, soybean meal. Same commentary. Higher high today, didn't hold it, already lower than yesterday's close, and for the first time in a few weeks, overbought again. Turning around, starting to slip, just like a classical situation. So I'm looking for lower levels. Next chart is corn. Very strong. It's super close to overbought, but it's getting there. And it might even get a little bit stronger in the next day or two, but probably it's about to stop rallying and turn back down again. And we do have a really wide, broad sideways range that's developed over quite a bit of time, approach over a year, actually. And I'm going back to the top of that bull move, huge bull move, that was at the end of 2021 and beginning of 2022. Looks like a head and shoulder top developed back then. Your neckline would have been breakout right about there, but that's a kind of a weird thing to have happen, going back above the line, neckline, and then closing below it was saving itself, and boom, boom, down you go, new lows. It looked like it probably reached its minimum downside objective fairly accurately. So that's the beginning of this big, big sideways. Looking for lower levels, but maybe a little bit more strength first and then down. Next, big up day on wheat, big strong rally, but now super close to overbought again. And I like 75, not 70. So getting up to that red line again could stop it. It might even stop a little bit before that. And we probably will be overbought if we jump up there the rest of today or tomorrow. And it will probably turn back down again. And this time, I would expect it to make new lows for the whole bear market since the beginning of the Ukrainian war. Next, live cattle overbought today again, like a week ago. Maybe a new high close, but it needs to be above the previous rally high if it's going to continue to get stronger and stronger and stronger, even though it's overbought. It's just barely overbought, but that's good enough. I'm looking for a turn down and looking for sell signals in cattle. Next, this already happened with hogs a couple of weeks ago. Overbought, sharp rally into new high ground. A couple of days later, we had a bearish engulfing ER sell signal. Didn't work, but they are sometimes part of the topping out or green signals bottoming out process. They tend to cluster sometimes, 2, 3, maybe even 4 in a month. Let's see what happens here. Looking for a move down a little bit lower real soon. Next, now we're trying to double top out in the OJ. Mentioned that yesterday. Possibility. Overbought again. The head and shoulders I was talking about for about a week and a half, 2 weeks worth did not pan out because the last shoulder didn't finish. So I see it coming before it happens, and then it didn't happen. But if we had started to go down, that would have been a very good looking head and shoulder top. But the rally kills it. But now all of a sudden we have the possibility of a fairly accurate double top and overbought levels. Looking for a move down immediately. Next, cocoa. Almost the same comments, but it's not overbought. Might go up another day or 2 or 3 or 4 and then have a correction. This is obviously a bull market and doing a very good, strong job, a little reminiscent of the S&P 500, by the way, on the way up. But bullish, can't help it. A little bit wary at the moment about these prices. So looking for higher levels. Next chart is cotton, the rag, sideways, boring, sideways trading range. We are getting closer to the selling price range, the resistance area that we have seen it stop at many times in the last several months since last October. So let's see if we can get overbought, and we're getting very close and getting up to at least 86 and maybe even 88, currently 83 and a half-ish. And then it's going to turn down, I expect. And sugar the sweet. I think it's going to have trouble in the same range it's been in here for the last 4 days. I think it's going to stop rallying and turn back. The beginning trigger will be starting to close below 2350, the low of yesterday, and it could do it at any time. I am really looking for a move all the way down to 20 and a third to maybe even 18, this big support area. Looks pretty reasonable. Broad double, maybe even the triple if you want to call it that top. Broke out to the downside, came back to resistance, and here we are twiddling at that little resistance. Let's see what happens the next couple of days. And the next chart is coffee, challenging the lows of the trend. Today might be a new low close, and before the end of the day, it just might drop completely into new low ground, looking for lower levels. And I don't see anything wrong with looking for 140 and lower. Another $15 down from 155 down. Next chart is back to the E-mini. You have a great day. The S&P is still up 1 point. DIA is up 1.5 points, but the Q's a little trouble today, down 0.5 point momentarily. Talk to you later. Thank you.